economy, the Associated Press reporting that China has surpassed the U.S. as the world's leading trade partner. And this comes as China announces its inflation rate rose 2% in 1 month alone last month. It's a sign of an economy gaining some strength. What does it mean for the U.S.? Joining us now, Brenda Butner, senior business correspondent, anchor of Bulls and Bears. So I was reading this article where shoppers in Beijing have seen the prices of vegetables double in 1 week alone. So inflation is a problem over there. What's causing it?
Well, it's not a bad problem that's causing it. Basically growth. I mean, China has numbers we can only dream of. Growth of about, GDP growth of about 8%. We're below 2%. Their factory output was up 10%. Retail sales, 15%. So it is basically growth driven, not supply side driven, which is the kind of inflation you want to see. And still, it's only 2%. That's well below what the government's target of 4% is. It's come way down from 6.7%. So
it's an issue, not really a problem, and certainly outweighed by the huge growth that China has seen. How does that inflation affect American consumers, if at all?
Well, we buy a lot from China, and you know, it may be that some of the inputs may become more expensive, so we may have to pay more. But it's more that China is becoming really a hub of capitalism, despite the fact that it's, you know, still run with the, you know, communist government.
And let's put some graphics up on the screen. It's really telling over what's happened in the last 5 years. China has now surpassed the United States as the leading trading partner in the world. 2006, U.S. Was the largest trading partner with 127 countries, China 70 countries. Now look at it, 2011, just last year, China the largest trading partner with 124 countries, the U.S. 76. So they've almost reversed positions there. That's hurting American businesses?
Well, it has to. And you have to look to the future as well, because traditionally China has, you know, made in China. You know what you get, these cheap little tchotchkes, basically. They are going from exporting products such as that to selling services, to selling investments. Maybe they're going to be building bridges, roads, all the rest. They're pairing up with companies in other countries. So they could very well go into markets that traditionally have been dominated by the United States.
The high-end products.
Exactly.
All right. China's low labor costs really allows it to produce products a lot more inexpensively, cheaply, if you will. American businesses, are they now saying, wait a minute, I can really make more of a profit, less overhead, if I shift my jobs to China? I mean, it's been a problem already, but will that increase?
It has been a problem, and yes, it probably will. We're seeing a lot more rural migration to the towns and cities, so that is a kind of limitless labor supply. There's no unions people have to deal with, any of that. So unions here in the United States, you know, are still worried that they're going to be losing all the pension benefits and everything that they've negotiated before. But the truth is, jobs are going over there because employers don't have to deal with what they have over here.
And, you know, how do we combat that? I mean, that's the real issue. Tim Cook is the new CEO of Apple, is now shifting some Chinese jobs of Apple back to the United States, but he's doing it out of patriotism.
Yeah, I don't think you ever would have seen that with Steve Jobs. Ever.
In fact, he told President Obama in their last meeting together, those Chinese jobs, Mr. President, they're not coming back.
Yeah, I mean, he did it because it was the way to be a good businessman in that sense.
Well, with rising trade influence, that means China will also have increasing political influence as well.
Absolutely. Money means power.
Brenda Butner, good to see you.